Hello and welcome. I'm Mike King, and this is an Air Cargo Unpacked interview, a Freight Buyers Club production. Each month I sit down with Neil Wilson, editor of TAC Index, the leading global pricing reporting agency on air freight rates and the calculating agent for the Baltic Air Freight indices, to look at where air cargo rates are moving and what is driving them. Now, air freight rates have made some dramatic upward movement in the last few months, mostly down to the war in the Middle East. So I started by asking Neil whether that has been continuing in late April and the first 2 weeks of May.
Hello again, Mike. Good to talk to you again. And to start with the big picture, the BAIOO index, which is our global composite, if you like, average of the rates globally, that seems to have leveled off, as I think we were indicating when we spoke to you this time last month. It was beginning to level off then. Flatlining, we said, but at very elevated levels, crisis levels, at or above previous peak seasons. So as you can see on the BAIOO chart, it seems to have topped out for the moment. Underlying that, I think, is two things to note. It's quite a complex picture because jet fuel prices are still very, very elevated. They're up about 80% year on year, which is much more than the crude oil price, for instance, given that the crack spread is wider, but they have started to fall back a little. So if you look at the first week of May, the average indicated by Platts, which is on the jet fuel price monitor that ART put out, is about 10% down. So there's been a bit of a pullback there. That might be to do with various things, supply being a little bit easier perhaps. There was this reports that China had stopped exporting jet fuel because they refine a lot. And apparently that's now been eased, and they have started to export mainly into the Asia region. And the second thing is that there's been perhaps a fall in demand because of the number of flight cancellations. The last data that I saw, it's probably being updated all the time, was that there were at least 12,000 plus flight cancellations announced for May alone, led by Turkish, Lufthansa, China East, and various other airlines. So that obviously means fewer flights. It means less jet fuel needed, but also less belly hold capacity. So rates are still elevated, but they seem to have topped out for now while we see what happens.
Neil, looking at the spot rate picture from Asia, are we seeing this same leveling off in those Asian markets as we're seeing in the overall index there that you were just talking about? And are these markets moving together, or is there a divergence between routes?
That's a really good question. So obviously, what we were looking at before, the BAIOO is the global average. That's all kinds of transactions, including things done on contract that were agreed months ago, as well as things that are current. The spot rates focus on the marginal price, what people are paying today or tomorrow to move something. I think that what you're seeing there is that the Hong Kong, which is the biggest airport in the world for cargo, 5 million tons last year, seems to have topped out. It's a little bit off from its peaks. Europe about $560 a kilo, US East Coast about $7 at the time we're talking. This is like coming into mid-May. So that reflecting the overall index. Whereas India, which really spiked in March, it more than doubled from 185 a kilo to Europe to over $4.10 at the beginning period of the Iran war. It was 410 at the end of March. It drifted down to 393 at the end of April. So that's come off a little bit. That was the most impacted. So obviously went up the most, and it's come off a bit. Whereas in other places like South Korea, the outbound there, it's still edging up a little bit to Europe and to the US, where I think there's a delayed reaction the further away you are from the Middle East. That's, I think we noted last month, that's still the case. One more thing to note, is that we're about to add more spot rates, and Shanghai should be up soon. So we have various people wanting to be panelists for that. So that should be happening fairly soon.
Okay, well, watch this space. Neil, any lanes really been jumping out at you that are acting out of the ordinary at all?
Yeah, very good question. So we had a look at the data, and there are various things that are up much more than that average, higher than peak season. And obviously the one that stands out, as I think you can see from the chart, Europe to Dubai, it's a pretty specific market. Unlike, say, Transpac, where a lot of the volume is done in dedicated freighters, this is mainly a belly hold market. And it's also dominated quite heavily by one player, which is Emirates, which is the home airline for Dubai. And so they've obviously had a lot of cancellations since the war started in Iran, as have other carriers going into between Europe and Dubai. So the year-on-year figure for that is now currently up 140%, which I guess is not, it's pretty astonishing. It's not a gradual movement. And until we see something more like a normal program being restored by Emirates and the other airlines running those routes, then I think it's going to stay very expensive. That's certainly what it looks like.
Thanks, Neil. The Freight Buyers Club is going to be attending Air Cargo China and Shanghai at the end of June. Will we see you there?
I won't be there personally. As you know, I was in Hong Kong last month for our dinner there, which was very interesting as always. But various of my colleagues will be in Shanghai. You know, we have quite a lot of the team in Asia, and you'll be seeing some of them there.
Neil Wilson, thanks for joining on this May episode of Air Cargo Unpacked.
Thank you, Mike. Thank you.